All right. Oh, count a trend or the art of trading your stop loss. Which one, guys? Count a trend or the art of trailing your stop loss. Just go down it as we normally would. Yeah, okay, cool. Does that every single time when I share. If you want it from the beginning, you need to go and look at the recordings. We've recorded every single session. So if you could go and look at the recordings, they are inside the chat. I posted them a couple of days ago. And we will be going back through everything, but obviously we've already kind of started. Samuel, how long have you been in? Just answer me that question before I skip this. How long have you been in? 4 days. Okay. Please go and watch the recordings. Because in them 4 days we've done like 3 sessions anyway. So yeah, go and look at them. This guy loves a party.
Boot camp. So our boot camp call today here is we're going to talk specifically about how we find some counter trend positions. Okay. Okay. So one thing that's super important, okay, is that we don't tend to trade counter trend, right? Our rules and scalping and all those things, because I realize we're going to talk about these positions. We're going to talk about them. But I realized in my journey that counter trend positions were most of my losses. So in order,
For some reason, every time I click on to the thing, it's not sharing. So let me try and share it a different way. Right, okay, we're good.
for me to limit the losses in counter trend positions, taking trades counter trend and doing stop losses, supports, and all those other things. In order for me to limit my losses in counter trend position, okay, in counter trend position, I had to create some sort of rules around it. I had to be like, if I'm going to take this counter trend, I want to make sure that some of these things happen before I take a trade. Okay. I need to make sure that some of these things happen before I take a trade. Okay. So we're going to talk about what those things look like. And something that's very, very, very important is our 238. Okay. I want to find a really good example. I mean, the structure in this is a good example. It was at open. Let's go to yesterday. Okay. Who's gonna bring? Okay, let's go to yesterday to talk about some of these counter trend positions. Okay, so let's do a little replay here.
Me, I can't see. Oh, hang on, I think you figured it out.
Anyway, I just want to see where the happened. Oh, that's my problem. Let's talk about.
Yeah, I think he's forgot to share his screen. Just bear with.
So just give me a second. Okay. All right. Okay.
There you go.
What we're going to talk about here is we're going to talk about counter trend positions. Okay. And something that's super important is the 238. Now we talk about this a lot in the basic boot camp, but the 238 is essentially our kind of reversal level that when this thing breaks, it's giving you an indication that the trend is ready to switch. This is obviously we see it break. This is a pretty good example, actually. We'll use this example at open. Okay. We did have some news coming here at like kind of 8 o'clock, which we had to be aware of. But I'm gonna talk about this move because there's two very important things that happen here. Okay. So let's just go into replay mode. Okay, let's just do it. Reboot here. Okay, now let this chart catch up. Okay, and this trend actually shifts. So you'll see that here as this starts. So right there it shifted. Okay. So it just shifted. So one thing I want you guys to see, okay, is that I mean the trend just shifted. So it's not the strongest trend yet, right? The trend hasn't held, it hasn't started to create some structure and those sort of things. So that trend, the 15-minute switch, not the best, hardest downtrend because it's brand new. It just switched. And you can see if this was going to be a strong trend, this would break and continue down and you'd have the structure, right? So there's two things that are super advanced that are advanced here. I would say they're super advanced, but this is what you're going to get comfortable with when you're starting to watch this. Okay. So when we're looking for trends, the first thing I need you guys to identify is the chart needs to stop. So what I mean by that is you can see we had this big old bouncing around here, and then this thing fell out. So something that's super important that you need to identify first, okay, is the chart needs to stop the direction it's going, right? We want to see it move the other direction. So, right, we get this big drop out of here, 580 all the way down to 380 at 200 pip fall. Like if you go look at it, look how aggressive that drop is, right? But on the one, we want to see this chart stop falling. That means it creates a support area, right? You can see this support line right here. It creates a support line and it holds. And what it does is it starts to break the candles and engulf the candles upwards. Right? So if anybody was actually on my call this morning, this started to happen and I was like, okay, once it starts to break above here, I'm going to get off the sell because we were looking for our opportunity to join this thing, but it started to tell me that it had held this space and was starting to break back up. And so you can see in this type of pattern needs to happen first. What it needs to do is it needs to stop, right? You get this, bounces up here, bounces here, bam, and then it stops, as you can see, up, down, breaks a little higher, down, and then finally breaks kind of out of this zone, right? Then we'd want to see another little pullback, and then it start to push back up, right? So this has to happen first. This tells you, and it's not 100%, right? This could also just be slowing down to grab some volume to continue down, right? But you need to see this structure start to happen. So the first part of it, when you see that, you're like, okay, maybe this thing doesn't want to actually continue to fall, and it actually wants to reverse. And you're going to let the candles tell you what's happening, right? This up and down, this up and down. It's not making lower lows and lower lows and lower lows. It's actually creating little higher highs. It breaks through the 238, pushes back to this structure. Then eventually it breaks up through this, right? So now if we wanted to buy this, we would be counter trend. If this was blue and the trend was still up, we probably would have a little bit of a better position, maybe at this 50, which is another scanner, but maybe at this 50, breaking back up. This is the first thing you want to see. You want to see the chart, and I talk about this on some of my calls and people are like, what do you mean? I want to see the movement stop. I wanted to see, you literally whipped here 620 all the way down here to 360. You got a 260 pip movement, right? In around an hour. which is a pretty strong move. You want to see that fall stop. You don't want to see it like kind of drop below and create lower lows and create lower lows. You don't want to see that. Okay? So pushing up here, you want to see it stop. This is the first part of the structure you want to see. Okay? So there's two options coming out of this. We're going to take this off the chart now so everybody wants to see this movement, right? You want to see this chart to stop dropping, right? If we're looking for a reversal up, we want to see it stop dropping. If we're looking for a reversal down, we want to see it stop going up. That means it stopped breaking these highs and stopped creating highs. In this, it stops creating lows. That means the buyers are slowing this down and they're starting to take a little bit of control of it, right? Okay? So we want to see this set itself out. We want to see it start to show you this structure, okay? I'm going to leave that little box up there so you can see it, right? You can see this thing creates a little support zone. Rather than just a little support line, it creates a zone here where it's just going up and down and up and down and up and down. And what does that mean when the chart's doing that? It's pulling in volume to go one of the directions. So now you're like, okay, it's pulling in volume here, and either it's just slowing down to grab some buyers to continue on its movement, or we're going to see if it wants to start to push back up. And some of these things can tell us about a counter trend, right? So first things first, it creates this space, okay? Creates this. The drop has stopped. It's now holding. I'm like, okay, I might be interested in a counter trend position here now because the chart has started to hold itself. It's holding in one spot, okay? So bouncing around, but holding this spot, okay? So, and then it pushes and starts to create these higher highs. Now it starts to create upward structure. And I know that upward structure on the one is not always the strongest, but it starts to create upward structure. Now, what do I mean by that? So after it slows down, it starts to break these highs. See this little previous candle? Gulps it up, right? Pulls back down. Then breaks it again. Not only does it break the 20, but it also breaks all these previous highs and comes right back to this level, right? It starts to create structure upwards. Right? So it's super important to see that now it's held this space and now it's starting to create some upward structure. Right? So let's see what it does here after. And just remember this is like rated open, so pretty volatile candles in here. Right? Look at that. It breaks all this structure, pulls back down into it. Right? So what it's doing is it's creating this upward structure. And we'll let this thing play out a little bit more so you can continue to see this upward structure. Right? This upward structure keeps moving. Right? It breaks this level. Right? Breaks this level, breaks that level here, breaks the 50, gets back over here, pulls back and creates what? What does it create? Right here. Creates a higher low. So you know now that the buyers, creates a higher low, which now you know on the 1 minute it held this space. Now it's creating structure as it wants to go up. It created a higher low. It broke this high, right? So now you're back up to this space. So all these things, very, very important for you to get comfortable with the candles and see the structure. Okay, see the structure moving itself, right? The right direction. Okay, so now you can see all that structure pushing that direction. Okay, so after you see that structure, this is the most important part. And normally, normally we want to see this in signal first. Now we know that this is quite impulsive. And if it is going a bit slower, we probably would have got our signal in here before we broke that 238. Didn't. I'm still okay with the entry at the 238, and anybody who's at my call knows that that entry was there. So now you've got your structure. You've seen it stop the dropping. It's now giving you on the 1 minute this structure up. The last thing you needed to do is break this 238. Now, one thing that we would have liked to have seen is this POC to have moved down to this space. It didn't. And we would like to be in signal. So it's not the perfect counter trend move, but this goes against all our other rules of kill shot. So we need to see these things. We need to be patient with them. We need to know that this is starting to happen. And then we need to protect it as it comes. So one thing we're going to do in here when we are taking trades outside of our signals, okay? When we're taking trades outside of our signals, and I'm going to talk here on Friday about inverse risk reward, okay? Okay? Is that you will not survive here. You will not survive a small 25 pip stop loss here. You won't survive it. You might, but more than likely not. Because if you look at this structure, if this was even to pull back, right? If this was even to pull back here, it's probably going to come back to this space, right? Your EMAs are down here, pull back to the averages. It pushed away from them. Even if it comes halfway to those EMAs, your 25 pip stop loss is done. And then it, of course, goes this direction. Gives you everything you were looking for because you didn't kind of wait for that sniper. So one thing you can do and be patient with these 238 breaks is just wait for a pullback off it, right? And then join it. You can see it kind of bounces around here, rips its way through, okay? Now, you must jam these trades. These trades are not on our rules. They're not on our high probabilities. Do we have some rules that help us with the probability of this trade? Sure, we do. But we must jam this chart for two reasons. If we were to go back to these EMAs, stop loss is 60, 70 pips, which means our 1-to-1 is up here somewhere, right? This is not a normal stop loss. The risk is bigger. So yes, of course, we want to get that reward bigger as well, but we can't hold a trade with a really big stop loss. We just can't, right? Even just to get back behind your EMAs or any of that stuff, you're looking at 100 to 80 pips, unless your lot size is much smaller than normal. You still have to have about a 1% risk. I don't want you, to be up here and your 1% is 25 and you're like, oh, I'll risk 4% this time. No, we keep our risk reward the way it's supposed to be. We drop our lot size and we give ourselves the kind of the 1-to-1 back behind these EMAs, right? And then the last thing is you absolutely must jam your stop loss. Now, we can play this a little bit. It probably will wick you out, we did this at open, right? Which it did. It did wick us out, right? Pulls into this signal, right? You had, if you did take this thing, you had a 50 pip TP on the board, right? And most of us are going to move that stop loss and drop it in here, right? Right? Are going to drop it in here and get, 10, 20, 30 pips. But these are bonus entries. So everything I'm showing you here with advanced trading strategies are bonus. That means if the market wants to give us a little bit, we're going to take it. We're not going to try and push and force more out of it. We're going to take it. Okay? We're going to take that opportunity. We're going to take the opportunity to get some pips out of this move. It goes all the way to 50. You had a trailing stop. Maybe you got 30, 40 out of this. Maybe you trailed early and got 10, 15 out of it. But you've got some pips out of it. Okay? So, the steps of a counter trend trade. I'm going to type them out here for you, okay? Okay? And we'll go see if we can find another example because we got a little bit more time here. But I'm going to write them out for you, okay? So the first thing is we talked about this zone. The market must stop. I like to say, put on the brakes. Okay? Right? It must stop the current trend. Like you don't want to try and take a counter trend trade if this thing's still creating lower lows. Because the trend's not over. Right? We're really trying to find the end of the trend. Right? And lots of people are taking these, and you got your smart money conceptors and all those people who are just trying to enter in these zones. They'll take lots of losses because this zone can be a slowdown to continuing. We need to see some of these steps to let us know that, hey, the potential of this reversing now are really good. Okay, so first you got to see that box. The market must stop. Right? We want to see this thing stop creating lower lows, start creating higher highs. Right? We want to see this structure start. We want to see that happen. So first, the market must stop. It must stop its trend. right? If you're going to try and take counter trend, you want to know the trend has stopped or at least is attempting to slow down so the other volume can maybe take some control of it, right? Because if it hasn't, then the sellers are just pulling, they're just looking for a pullback, right? They're just looking for a pullback to continue on, to grab some more volume and continue on, which we know we were looking for this morning. We were looking for that pullback, right? We didn't get that pullback. Structure started to tell us up, and I was like, okay, I'm off the sell. This is starting to tell me that it wants to move back up. So first thing we want to see is the market must stop. Okay. Second thing is 1 minute structure shift. Okay. One minute structure shift. That means you see it start to create higher highs and to create higher lows, right? Higher highs, higher lows. That means your structure is moving up, right? Right? Lower lows, lower highs. That means your structure is going down, right? This pushes up, breaks a bunch of structure, pulls back, creates its higher low, hits all the way here, creates another higher low, eventually ends its kind of move up here and has a bigger pullback. But the structure must shift to the direction you want to go. It must shift from down to the counter move you want. Okay? Then we would want a signal shift. Okay? This isn't always going to happen. And if this wasn't open, you would have got one, right? Just the open move so far in the EMAs. Okay? To the direction we want to go. And you can see they're kind of out of order here on this example. But we want this. We would want this to happen first. It didn't happen first. It was impulsive. We were coming out of open. Okay. Let's shift to counter trend. Okay. So we want to. It would have been nice if this wasn't open and we weren't getting these big impulsive candles to see this signal down here somewhere. Okay. Then the break is even better because we would have saw this signal down here somewhere. We didn't get that first, but it was another opportunity for confirmation. We got it after we got into this trade, and it was confirmation that we could get a few more pips out of it. Okay. We want to see the signal, the kill shot signal shift to counter trend. Okay. And the last thing is we want to break the 238. Okay, that's the last thing for us to enter. We want it to break the 238. And you're probably going to need bigger parameters, and you're probably going to want to enter as it breaks the 238. Right? You would have been whipping it there and pulled back on us a little bit, shot up. And maybe you only got 10 pips out of this. Maybe you got 30. Maybe you got 50. But these little bonus entries, adding, another 10 pips here or 20 pips there onto your 20, 30 pips you're getting from maybe kill shot entries, that's what's going to take you from doing, right? That's what's going to take you from doing, 100 pips a week to 170 pips a week, right? Adding those 70 pips a week is going to be a big difference in the end of the month, right? Okay. And we took this one, right? Normally we want to see that signal first, but we knew that signal was coming because these EMAs were sitting right on this trend. So it was okay to get into it before that. The confirmations, these can come in either order, but it's better if we see it first. But it's okay. We got into it here. It was impulsive. We knew we probably could get 10, 20 pips, get protected, which we did. And then the signal came after, which you're like, you're already in this position. I haven't protected yet. It's probably going to pop up a little bit. Maybe I got a better opportunity to pop up and take some pips. Okay, break the 238. And the last thing we're going to do, jam. Now I'm going to talk about that again here just for about 5 minutes as we close this down. I'll move into why we jam our stop on all these things, okay? And like I said, everything I'm showing you here in the advanced is a little bit outside of our fully backtested probabilities. So our fully backtested probabilities are the signals that are on trend with the 5 confirmations in kill shot. Okay? Easiest way to name them. And The reason we jam these is because they're actually, we have rules around them. Okay. We have rules around them, but we have the ability to jam our stop loss because we're just going to take these trades that are outside of our fully back tested probabilities. And you can go back test these as well, and you can see that they can add to the pieces of pips we get each week. Okay, we want to jam our stop loss, right? This is our stop loss, especially because at this 238, especially here, is your risk is big, right? If you're 1-to-1, your risk is up here. So you want to make sure you're going to take what the market gives you and then not come all the way back down here because it does. It has this big pullback and just about hits the stop loss, right? So we want to make sure we jam our stop to add to our wins, to add to what kill shot got us this week, to add. These are bonuses, and we want to make sure we add them. Okay, so those are your rules, your counter trend trade steps. And obviously you guys can add different pieces. There's another scanner in here that helps you get into them a little bit earlier, which we'll have to do training on once we get that thing all locked and loaded. But these are the pieces and the questions you need to ask yourself. Did the market stop? Is it ready to push back? Because if it's still breaking and still creating lower lows, is it actually ready to push back? Okay, we want to see that market structure shift. We want the structure, although maybe longer term our structure might be telling us it's down or up. We want to see what it's doing in our shorter term. And if our shorter term structure is starting to tell us that maybe it wants to shift, then we have a better opportunity to join that structure as it shifts. Okay. Then we want a kill shot signal. Like I said, these can come in different orders. Normally, you want to see that signal shift first. The reason we didn't get that one here is because it was open. And open's just got more volume in it. It's more volatile. On a normal outside of open example, you would have had that signal probably down in here somewhere. Then it would have broke this. Right? Then we want it to break the 238, and then we want to get our stop loss and profit. Okay? We want to get our stop loss in profit. That means we take our stop loss from here and we jam it. We put it into stop, we put it into profit, whether that's taking an extra 5, 10, 20, 30, whatever that is, whatever we're comfortable with, whatever we wanted to hold, right? I would have wanted to break and close of that POC would have been is to move our stop loss, right? So that's to jam our stop. Jamming our stop is taking our stop loss, putting it into profit, making it a stop. Instead of it being a stop loss, it's now a stop profit. We're now risk free. The reason I go risk free all the time early in these trades is because they are not fully online with our probabilities. So I'm not taking any extra risk. It's not fully in line with the rules and the parameters, so I'm not taking any extra risk. Okay? So that is how we take counter trend trades. Okay, we only got one example here today. I don't want to go on too long with these trainings, but this is how. These are the steps you need, right? The market must stop moving on trend. It's got to stop. It's got to stop making lower lows or higher highs. So you know that you're like, okay, the counter volume of whatever move just happened is coming into the market. Okay, then we want to see that volume create a market structure shift on the 1 minute. Not too worried about what it's doing on the longer term. We want to be aware of what it's doing on the shorter term. Okay, then we want to see a kill shot signal. We see that kill shot signal. We're like, okay, it stopped. This 1 minute structure is changing. We now got a kill shot signal. Now we got 3 of those things telling us it's probably going to want to push back at least a little bit. And if it pushes back and breaks at 238, now is our opportunity to join it. And I know it's like, why can't we just join it down here and take hundreds of times? Because we didn't get our confirmations until up here. Okay, and then in order to protect us outside of our normal probabilities, we must jam our stop and take what the market gives us. Okay? All right. That is day 3 of our advanced boot camp, our counter trend trades. 2 more days to go. Thank you guys so much for jumping on. I really hope this is giving you some extra perspective on how to use kill shot to your advantage, how to add, some of these extra bonus entries and kind of take this kill shot stuff kind of to that next level. Okay? So everybody have a wonderful, wonderful day. We'll see you tomorrow for open, and we'll also have day 4 of our advanced boot camp.
Right, so what we're going to do is we're going to go straight into DeFi. We're going to go straight into DeFi strategy. I don't think we need to do DeFi overview because we've all kind of seen it, but we can look at that another time. So as long as you're happy to go straight into the DeFi strategy, and then we can put the two together because obviously, on my sessions, I'm trading the both, right? So you happy to go straight to number two? Put some yeses in the chat if you're happy to go straight to number two. Yeah. Okay, perfect. Right. Are we on that? I hope that's not. Yeah, it is. I pray that we do not get no French. I pray that we do not get no French. I pray that we do not get no French. I'm joking.
Alrighty, hello and welcome back to the DeFi strategy tutorial training series. My name is Manny Quinones, and again, I'm blessed, grateful, and excited to be able to be here with you. And in this video here, we're going to cover the DeFi strategy in a little bit more detail. So the DeFi strategy training here is going to break down the system and how each component works together. The key levels, the prediction bands, the trend tracking candles, and the scorecards all explained individually and also as a unified system. This way, you'll be able to understand how the confirmation or the confluence stacks, how the signals are formed, and how to identify an ideal DeFi setup. So again, you're going to be able to cover the breakdown of all the DeFi components, how the confirmations build the signal strength, the scoring logic, and the 4 setup framework to be able to approach the market. Now let's jump into it. So decoding DeFi. Let's begin by decoding DeFi, right? The very system is built on 4 core components. Individually, they each provide valuable market insight, but combined, they create the system that makes the DeFi strategy so powerful and so sought after. So next, we're going to break down the components so you know it, you understand it, and how to apply it. So let's begin by the 4 DeFi core components. Now, we went through this in our previous training, but just to give you a brush up, the 4 DeFi core components are built on the key levels, the prediction bands, the trend tracking candles, and also the scorecards. Now, there's a lot more to the strategy, but these are the 4 core components that you want to pay attention to help look for your setups. So let's begin by jumping into the DeFi key levels. Now, the entire purpose of the key levels is to use them to identify where price is more likely to react. As we stated, the key levels are psychological levels based on historical price action. We took the entire history of the market and time frame by time frame by time frame, we looked at the pip interval on where price is more likely to reverse. And we did that, and we ended up creating these psychological key levels. So these psychological key levels are designed to act as clear levels of support and resistance. And we've also color-coded them so you can quickly spot them on the chart. You'll notice when there are key levels above your current price, they will be one color to represent resistance. And when the key levels are below your price, they will be another color to represent supports. So it's very easy to gravitate to them and understand what you're looking for at that particular zone. Now, as stated, these key levels also automatically adjust based on time frame. So they're not the same on any time frame. So if you're on the 1 minute, the 5 minute, the 1 hour, the 4 hour, the daily, so on and so forth, the key levels will adjust on those time frames so you can trade those time frames accordingly and appropriate. Now, it's important to note that price may reject instantly from this zones, or sometimes they will consolidate before reversing. These key zones are not a know all, be all, do all. Okay? They're just additional confirmations. So as you'll see here on the screen, you'll see here price approached the key zone, had a nice wick reaction, and a sharp price reversal. You'll see here, right, that as price turned over, we had a quick wick to the upside as price continued to drop down. And then you can see here, price kind of dipped below the zone. You could see here, price made it back to the zone. Here, price dipped below the zone. Here, price rejected from the zone, pulled down, rejected from the zone, went up, rejected from the zone. So you can see they serve a great, great purpose. Not perfect, but they are a strong confluence that you guys can look to on this strategy. Now, a quick pro tip is that you want to always make sure that you're validating your key levels, as key levels work best when they are aligned with market conditions. So in trends, price is often going to break and retest. And in ranges, price will typically reverse from extreme highs or extreme lows. So the pro tip here is to identify the environment first and then execute. You can see here on some trending examples for the key levels, you can see here price broke above the key level and pulled back in with recent price action, validating that price action and validating that price level. And you can see it's done it over here just as well, where the DeFi triggered an idea. You see it act as an area of resistance and then retested as an area of support before giving you the DeFi idea. This is how we begin to validate these key levels. And you could also see it in ranges for reversals. So we have range highs and sometimes we have range lows, and you can use these range lows again to validate these key levels. Now, from the key levels, we also have the prediction bands. Now, you want to be able to use the prediction bands to anticipate where price is more likely to move or reverse from. And these act as a dynamic zone of support and resistance that adapts to price action. So think about these lower bands and think about these upper bands as additional support and resistance, just like your key levels. And these bands are also color-coded to be able to match the key levels. So as you start to see price approach a key level, you'll start to see them push into the prediction band, while the prediction band and the key level is both colorized and harmonized. And you'll begin to notice that the entire system is completely color-coded to just make it a little bit more simple. Okay? Now, you will also notice that sometimes the bands may squeeze before volatility expands, and it leads to really strong breakouts. So as you see up here, you have a really tight band squeeze. The market starts to really, really squeeze and then gives you a massive breakout in the opposite direction. And then you will notice that sometimes the bands begin to have this very, very wide separation. And that wide separation really represents overextension. This is what we call price deviation and regression. And so you're more likely to see a massive pullback move when these bands are extremely wide. So again, remember, that's called price deviation and regression. And whenever the band starts to get really, really, really tight, that's where you're looking for a squeeze and a breakouts. Okay. Now, please note that the settings on the bands can also be adjusted. So you can really customize this to work the way that you want it to work. And if you use a smaller setting, it's going to produce, more frequent ideas. And if you use a larger setting, it's going to provide, more stable, singular moves, which we'll continue to learn throughout the training. Now, as discussed already, the pro tip for the prediction bands is just to look to identify price rejection when a prediction band and a validated key level meets. The confluence between the zone and the band, it may strengthen your overall setup. And DeFi also offers additionally 3 moving averages for additional trend confluence and zone strength. And you will start to see these things coming in. But just remember, use your bands and use your key levels in tandem, in confluence. You want to be able to see a push and a rejection when both of them are meeting up. That's the most important part of the prediction bands. Now from there, we have the trend tracker. So the trend tracker, what this does is this helps you to essentially stay in alignment and track the immediate trend strength and momentum once DeFi provides an idea for you. So these are also color coded, just like the rest of the system. It's an independent trend tracker. So these little arrows that you're going to see on the screen have nothing to do with the clouds, have nothing to do with the bands, have nothing to do with the key zones. It's its own momentum average logic, which is basically going to look over the course of, X, Y, and Z candles, and then let you know what the average momentum is. So is the average momentum of the idea down, or is the average momentum of the idea up? So this is designed to basically work together with your trending candles. Now, something that you're going to notice as well is that the candles are also color coded as well, based on, this cloud system that you see over here. So whenever the cloud system is positive, you will start to see the bullish candle color. As the cloud begins to transition, and potentially go from bullish to bearish, or potentially from bearish to bullish, they will start to turn a neutral color. And then when the cloud system is confirmed to be a downtrend or bearish, they will now turn the bearish color. So in this example, an uptrend are purple candles, and the black candles are the downtrend, while the gray candles, they kind of represent the transition. So the goal here is to be able to say, okay, if I'm looking for a DeFi idea and the DeFi idea is bearish, I want to be able to see bearish candles, which are either gray candles or black candles, preferably black candles. And I also want my arrows to be black and pushing in the direction of the idea. So now you're getting candle color direction, momentum, trend, kind of all rolled into one simple to easy system. Okay? So we just discussed this, but again, the pro tip is that the candle colors may shift sometimes during consolidation, but the trend tracker is going to reveal the true momentum average. So on pullback into your entry zones, which is what you see here, see how this gray area, this is really your entry zone. And you see once the idea came negative that, the candle started to consolidate, right? So this wasn't a fast moving trade. And you might be wondering, is this market going to continue to drop off? Well, again, you just want to make sure that if price pulls back into your candle zone, into your entry zone, and then turns bearish, going back in the direction that you're looking for, you just want to make sure that that bearish candle and that down momentum arrow is in alignment. And that will serve as a really, really, really good confluence to continue to push the market down, as you see here. So that's a really important tip that you guys want to remember, because it's going to be very helpful later. Now, the last part of the system is the DeFi scorecard. And this is very simple. So the DeFi is going to basically track. Okay, I actually just realized that this is incorrect. Okay, but the DeFi scorecard is basically going to grade every single one of the DeFi ideas by confluence confirmation. So this is where you're going to start to see this little pop-up, and that little pop-up is going to give you different readings. So the DeFi ideas are going to generate upon the core criteria being met. So you might have bands, you might have levels. There's a base criteria that needs to be met. And then once that base criteria is met, there needs to be a minimum of 3 confluences or 3 confirmations in addition to that base score in order to generate a DeFi idea. And there are a total of 15 built-in confirmations on top of the base score. So the scores are going to start at a +3, and they're going to increase as the confluence stacks. So you're going to see a +3, +4, and a +5. Now, whenever there are 6 to 7 confirmations or confluences that all stack up at the same time, it's going to transfer to a 1-star idea. If you ever see when there are 8 to 9 confluences stacked at the same exact time, it's going to be rated as a 2-star idea. And then whenever there are 10 or more confluences that are stacked, it's going to turn into a 3-star idea. Now we also have something called the golden candle. And in this color layout, I actually have the golden candle listed as red. I think it looks a little bit better here. All righty. So the golden candle is going to upgrade the idea quality by +1. So this golden candle is its own logic. It's a very strict confluence of very particular confirmations that I look for at one time. It has to do with candlesticks, price action, momentum. There's so much that goes into this particular golden candle. All righty. So if there is ever a golden candle, it's going to automatically upgrade your idea. So if you have a +5 with a golden candle, it's going to upgrade to a 1-star. If you have a 1-star with a golden candle, it's going to upgrade to a 2-star. If you have a 2-star with a golden candle, it's going to upgrade to a 3-star. And then now the only way to get a king confluence rating is that you need to have a 3-star idea, which is a minimum of 10 out of the 15 confluences met, plus the golden candle. And if you get that, then the idea will upgrade to a king confirmation. And the king confirmation is DeFi's highest confluence rating. Okay? That's the best that the system can provide. Now, the pro tip is to understand that scores reflect confluence stacking, as we just discussed, but they do not represent probability of profit. So strategy usage, market conditions, and experience absolutely matters. So traders, you guys could use the DeFi scores to validate your own setups, adding potential confluence to ideas that you are already considering. So if you're already trading and you're looking for a decent entry and you need a little bit of extra sauce, you can go ahead and use this as a confirmation to give you that extra push to say, hey, you know what, there's 5, 10, 15 confirmations or confluences that are lining up on that candle to push that market. Okay? Now, from there, how do we use all 4 of the DeFi steps in one simple setup? Easy, right? Step number 1, you look for a key level and you simply validate that key level with previous price action. Here goes a rejection, breakout, retest, validated key level. 2, you make sure that your validated key level and your prediction bands are in alignment. So you're able to you're looking for like a double bounce. 3, for a better idea is to just look for your trend tracker to trigger or shift in the direction that you're looking for. So in this example, we were kind of looking for a bullish move. So now we see a bull color with a bull trend tracker, right? So now we can say, okay, the market's now starting to get ready to push up. And then last but not least, look for a scorecard. Now, again, This represents only potential movement, okay? And it's not a guaranteed outcome. Very, very important. Now, you can have a low score and still have a great move, but obviously a higher score could, potentially help, with a higher move, since you have more confirmations that are stacked up. And then just remember that once that scorecard triggers, it will automatically initiate your candle zone with your entry, your stop loss, your warning line, and then 3 different target levels. They will all be available for you immediately as long as that DeFi idea is active. All righty. Now, again, here is an ideal DeFi illustration of everything lining up just perfectly. This is kind of the bigger picture. We have a nice validated key level right over here. The market is also trading into the bands. So you see we had one rejection and then a second possible rejection. You could also see that we have our moving averages. They are also available. They're built into the DeFi system. We also have a bounce of the moving average. We have a crossover of the other 2 moving averages. We have a golden candle. You see that red candle. And this DeFi idea ended up ranking as a king confluence idea. So it ended up, becoming one of the strongest confluence stacks that DeFi offers. And we've seen a nice strong move to the upside. This is really what we want to look for at the simplest level. Just lining up these 4 components to get an ideal DeFi idea. All righty. So with that being said, we're going to get ready to wrap up this DeFi training. I hope that you guys learned a lot in this training, and we're going to get ready to we look forward to see you in the next training video.
Right. Okay. I think that DeFi one definitely needs to be gone over again, just so that there's definitely going to be parts that people missed. I know that for a fact. But as I was going through it, as I was listening to it, now I did just change the color of my chart, which I unfortunately, I don't really like to do this, but I did notice one thing though. There's a huge difference. And I know it's like, ugh, yuck, right? It's fine. But when he was talking about the different color candles and stuff like that, let me just go back to dark, right? For 1 second. Yeah. You can't really see you can't really see the bands underneath. It's slightly, even though it's nicer to look at and I prefer it, but I think that there's certain things that you're not spotting, while there are certain things that are more highlighted in the dark. Does that make sense? Like, I also believe that it's good to use. Yeah, definitely. I also believe that it is good to hang on, use kill shot in alignment with it. Because look, the 238, I was watching the trade that came through on the 1 minute. As he was talking, I was looking at my laptop with the trade, right? And this trade did come in, okay, which it came in here. It did pull back from the 238. So I was looking at that and then watching and thinking about what Jay was talking about on his session, waited for the shift, like this trade and what Manny was talking about and what Jay was talking about correlated. Okay, we were going up, right? Okay, it kind of stopped. It stopped and it started to change direction. Okay, it pulled back from the 238, then came back into the entry zone, back down, broke the 238 and came back down, right? So therefore, you could have got in that trade, right? You could have got in, come down to the 238 as your TP2, waited for it to come back up, because if it bounces off the 238 and then it looks like it's going to come back down, we're breaking the 238, right? So therefore, you could have got TP1, made the two just slightly above the 238 or on the 238, your TP2. Let it do its bounce back. Then wait and see, is it going to come back down from the confirmation of this trade back to the 238? Because then it's going to break, right? Does that make sense? Because as he was talking, that's why I'm saying I need to watch that again, because I was making notes, but as he was talking, I was looking at this example right here, and I realized that using Killshot and DeFi together are two powerful things. 100%, right? Because you're getting the DeFi, but then you're also getting the Killshot confirmation as well. Therefore, that would have been a solid move here, right? That would have been a solid move here. I mean, I don't know why that is there, because that serves zero purpose. Yeah, which is fine. You're going to get that. You're going to get that. And then I also realized that one thing I do want to do. Okay, so they are here, 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 here. So remember when we were doing my sessions previous, right? And we were using, who remembers when we first started doing my sessions on DeFi? And we were using breakout of this zone, take some pips, break out 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 of this zone, take some pips. Who remembers that? When we first started doing my trading sessions using DeFi. Can anyone remember? I'm sure that David, you should remember. Miss Umu, you should remember. I'm sure you should remember, Linda. David Craig, you should remember. Miles, maybe. Yeah. Angel, you should remember. I'm sure you should. Sonny, you should definitely remember. Jason, 100%. Yeah. Oh, yeah. And you, Mo, as well. Okay, cool. Right. So that's how we started trading these, and it reminded me of that. And I'm like, okay, cool. So I wish there was a way that I could make one white and the rest dark. Is there a way to do that, Craig? Is there a way to do that, Craig? I mean, Carl, sorry. Don't know why I'm saying Craig. It's because I'm looking at David Craig. Where I can make one white and the rest dark. I know, but I really feel that we're gonna need this. I think there might be something to do with unsinking. I believe that they're not sunk anymore. Okay, we'll have to figure it out. Okay, I need that. I need to figure it out. Thank you. Yeah, because I feel that this will help, right? Because I want to go back. You know, I want to kind of do that, like how we were doing it before, even how we're doing it now. Don't get me wrong, but I'm just saying it's a further confirmation on the strategy that we're using. And as both of them were talking, I'm thinking, wow, we're pretty much doing this anyway, right? We're pretty much doing it anyway. So yeah, I think it's solid. I think that using both of them together is really massively going to help. Um, Massively going to help, right? So yeah. How do you guys feel about that then? About them two sessions that we've just covered? I don't know why I'm yawning today. Good with repeat. Yeah, I think we're gonna go over this again. Definitely 100% because check WhatsApp. Oh, literally just. How on earth did you just do that? How did you just do that? Because the little smarty pants over here. Open two tabs and set it as a split screen. Hang about. I've got to remember how to do it on here now. So you go small screen, didn't you? Yeah, let's do it this way. And then we open. Hang on, do we have to open another one now? Remind me. So this one. There we go. Oh yeah, I forgot about this. How I used to do this as well on the old split screen. Oh, you absolute amazing, amazing person. So now I can have, oh, how can I just have, say like, these two over here and these two over here? See, you learn something. But if I go two screen, if I go double on that, then that gives me the 30 and the 15. I need to have these. That gives me the 1 and the 30. That's something I need to figure out, right? So if I do the same thing over here, move, why can't that move up? Oh God, that's annoying. Oh, no, come down there. Leave you there. Let me try. Oh, it's going to give me the same, isn't it? Because they're different on each chart. That's what I need to figure out. That's one thing I need to figure out then, because it would be good to have save each layout. Oh, we need to get on a call tomorrow, right? Because Carl is going to be doing some sessions on how to really get the most out of TradingView as well, which is going to be really, really good. for sure. But yeah, I need to figure out which will be best on here because I need to I've got to have my lines. I've got to have my lines. But yeah, no, I've got to have my lines. But I'm thinking I don't necessarily need to have them here. I could implement them on this scanner here. But again, that's something that we will figure out as we go along. The best I just want to make it the best so that everyone gets the best, right? That is the most important, okay? So what I might do is go back to how I originally did it when we first started these sessions and just have my lines on here with the DeFi. Call me soon and I'll explain it. Okay, cool. Yeah. Okay, perfect. Because I do feel that having one on the DeFi just with this layout is going to be much better. All right. 100%. Just because you'll be able to see this behind, see the differences. Yeah, I think it's going to be much more efficient. So we'll make that happen. Okay, so we're definitely going to go over that session again. So next time when we come on to DeFi, we're going straight back into that one because I don't want to move on until everyone understands that first one, because with DeFi, it's a bit more technical. Yeah, it's way more technical than Killshot. Killshot is very, very simple, easy to understand. Whereas DeFi, it's a bit more, there's a little bit more in it. But when you merge the two together, the two are going to work really, really well. But then it's also good to have, Killshot open on its own, just so you get to see what Killshot is doing as well, right? Even though this is DeFi also, I believe. Yeah, this has got DeFi in it too, I think. Yeah, it has. Yep. Okay. It would be good to just have Killshot on its own. Yeah, so that's what we're going to do tomorrow. We're going to go back over the next session on Killshot, and we're going to go back over the first session on DeFi. So that, again, that is, solidified in everybody's head. The more we go over, again, the more we become, the more everyone becomes better, right? The more knowledge you gain. Knowledge is power when used correctly as well, okay? So I'm happy with that session. And also, guys, when he was explaining it, like I was saying, I had my laptop next to me and I'm looking at what he's explaining, but I'm looking at it in real time. So as he's explaining it, I'm looking at it in real time. So if you guys have the ability to, on your screen, have maybe a split screen on your computer and have the Zoom open and have your chart open with DeFi on it, that way, as he's explaining, you're looking at it in real time, okay? Because as he was explaining it, I'm looking and I'm going, okay, cool, that's that. Okay, perfect, that's that. Right, okay, cool. That makes sense. Right, okay, I understand that. Now, does that make sense to you guys? Even though it may mean that you have to listen to it again, right? I think visually, lots of people are visual learners. So as he's talking about it, because on pictures it's different. I realized that as I was looking at it, right? Because when we're in the market, we're not looking at pictures. We're looking at market movement. We're looking at how it's moving. So when you've got somebody explaining something as you're moving, just like when you're in a car and you go for your driving lessons, as you're driving that car, the instructor is guiding you and telling you what you need to do. Like, do you know what I mean? When you're learning how to drive, obviously not when you're in your test, he doesn't say a word, keeps himself quiet. So you think, like, have I failed? Have I passed? Right? But on this, honestly, I felt like I got more from it as he was talking about it and I'm watching it move in real time. Okay? So that is what I would highly, highly recommend everybody to do. Split your screen, see what he's talking about in front of the screen, and have your screen in real time. So you can be check marking what he's saying and as he's saying it. All right? Anything that is going to help you to understand and learn it better is the best thing that you can do. Yeah? Is everyone able to do that? Because if not, then I can do it on my screen. If you would prefer me to do it on my screen and have my screen open and have the training and the live on my screen, then I can do that. So would you prefer it to be my screen than yours? I guess it would probably be easier to do it on mine. Yeah. Okay. That's how we're going to do it then from now on. I think even when Jay's going over it, I want to compare it because I was also thinking about this as well. When Jay Bonham's going over the training, he's going over it on US 30. It's all good and well, but me, I don't really trade US 30. So I'm also thinking of doing the same thing on Jay's training sessions and kind of correlating it together with gold at the same time. Yeah, that's good. Okay, so that's how we're going to do it. Perfect. Then that way we can see, obviously US 30 does move differently, but I want to put up an example of the example that he's using as we're kind of putting it together in real time, because I feel that that is going to help you learn it. Because another thing that I also think about, right, is that when you guys might be trading, you might be thinking, I don't know if you are thinking this, but he's talking about US 30. We're trading gold. Does this work with gold as well? And you guys might be thinking it's DJI 30. You guys might be thinking, like, in the back of your mind, but not so much. I don't know. Like, what about gold? Will this work with gold? Am I confident to use it with gold? Am I confident to trade with gold? Like, do you know what I'm saying? Does that make sense? So I try to think about all the things that you might think about when we're learning to see what we can do to improve. Yeah. So that's what I'm going to do. I'm going to correlate I'm going to put the both together, Jay's training and Manny's training with gold, and do it like that. Because I think anything else that we can add while we're learning it is going to help massively. Right? And look, guys, we're still in that zone. When we started this training session, what time? About here, look at what it's done. It's still sat in this area, and it's pretty much, yeah, it's barely, yeah. But anyway, it doesn't really matter. Okay. Okay, cool. So that's what we'll do then. We'll leave it for now. And we'll be back again tomorrow. Hopefully tonight at market open. Market might decide to come out of this zone. Let's see what happens. If it does and I'm still awake and raring to go, I will probably jump on and do a quick session. If not, I will see you tomorrow for the sessions. Now, if market is making some moves, I'm going to be doing some extra lives. Remember what I said? I want to go and do a live-a-thon. Okay? I want to do hours of trading, right? Hours and hours of trading. Because I want to show everyone that we've got the best community. Okay? Oh yeah, also we've got our launch call tomorrow, which I'm very excited about. All right, so we'll end it there, family, and we'll be back again tomorrow for trading and training. And yeah, I would be very mindful, right? Maybe just leave trading tonight, right? Don't take any trades. While it's in this zone, it's trying to catch you. Okay? It's literally trying to catch you. I've been watching it. I wouldn't risk it. Even if you think, oh, well, look at the 1 minute. I could definitely get some trades out of that. There's going to be that time that you're going to get into that trade. I'm telling you now. And market's going to go, see ya. Or the opposite way. So please, let's let market break out of this area before we start entering into trades again, okay? It's the safest way to do it. And when you can start identifying areas where it's unsafe, it's kind of unknown territory. You heard what Dan said on the call. Any pattern he saw, right, weren't kind of correlating with what he was seeing. And I've seen that today myself multiple times, right? So the best thing to do, and the real growth comes in when you learn when to leave market alone, okay? So I'll leave you with that. And then you'll really start to make money, okay? Is understanding when to walk away from the market. Okay. Guys, keep plugging into these sessions because I promise you, the more you keep plugging into these sessions and the more we keep going over it, I don't care who you are, you will become successful at this. I promise you. I promise you. I know it. I promise you, right? The more we do this as a community, as a family, the more we plug in and connect, there will be so many more, and everyone is going to have a success story coming out of this community. I promise you, right? So guys, love you all, and I will see you all tomorrow for our next session.